1 year ago, we tested all of the monthly dividend paying stocks. And at the time, there were 44 of them. Now, if you can believe it, there are 55 monthly paying dividend stocks. And in this video, we found every single way possible to make the video and the detail, the analysis even better. In this video, we'll break down all 55 monthly paying dividend stocks, their performance over the past 1 year, 5 years, 10 years, and if applicable, 20 years. We'll look at their stock price relative to their 52-week low and their 52-week high. We'll look at their dividend income as well as their net asset value. We'll see which of the high yield dividend stocks are posing as good investments and make available to you the dividend history for every one of the 55 stocks. Okay, so here's the spreadsheet covering all 55 monthly dividend paying stocks. This is the main dashboard with all the performance data over here to the right. We've got, of course, the company name, the investment type. That's going to include REITs, business development companies, BDCs, royalty trusts, and closed-end funds. We got the yield, stock price, market cap, 52-week low, 52-week high. We've got some great graphs to look at overall for all 55. And we also broke down only the business development companies and the real estate investment trusts. Now, just for your awareness, all of the analysis, all of the data that took hours to complete, this spreadsheet is available to you for free. All you have to do is click on the link down in the description below. Now, just for your awareness, all of this data you see in here, the master stock price, the dividend payment information, all this data here for the master, the 20, 10, 5-year, all of it is pulled from two different sources. From stockanalysis.com, we got our price history on a daily basis going as far back as necessary to get at least a 20-year history. And all of the dividend payment information came from seekingalpha.com. Now, before we dive into the actual analysis, here are the assumptions. We're assuming a $10,000 lump sum investment at the beginning of that period, and we're not making any additional contributions. Ultimately, when it comes to the performance, we're gonna be looking at dividend income on that lump sum investment and the change in value of that lump sum $10,000, and that will allow us to get our total return. Now, one thing you'll notice here is that there are some pretty big players on the market cap front. These stocks right here are by far the largest investments from a market cap standpoint. I don't even know how to say that. Itaú Unibanco Holdings, Realty Income, Banco Bradesco, Prembina Pipeline, Telefonica, Brazil, Healthpeak Properties, AGNC Investment Corp. All of them have over $10 billion in market capitalization. But they're not necessarily the highest yielders. In fact, we could sort this by yield and see that there are some pretty high yielding companies here. Eagle Point Credit yielding 25%. Oxford Square 24%, Horizon Technology 21%, Orchid Island 20%, Prospect Capital at 19%. So the big question here as we look at this list of companies, the market cap, but also that dividend yield is, which of these companies are actually good investments, or at least which ones were historically good investments that actually went up over time, that had dividend income that was increasing over time, or at least not significantly dropping. We've got a total of 5 bank stocks that are all ADRs, and they are essentially foreign companies. Then we've got business development companies here, a total of 14. We've got, how many here? 6 closed-end funds, a few common stocks, and then significantly, by far the most, we've got REITs. We've got a total of 20 different real estate investment trusts and some royalty trusts as well. So the reality is with these different types of companies and different type of tax structures, the type of tax treatment you would take as an individual investor is going to differ based on these investments. REITs are going to have that ordinary income tax treatment. You may get different and or better results from maybe a master limited partnership or those royalty trusts. BDCs are going to have unique tax elements based on the type of underlying income they have. So just make sure do additional research and due diligence on the type of tax treatment here. That's not the goal of this video. All right, let's take a look first at the 1-year returns. And this data means it's going from October of 2024 through September of 2025. So when we're looking first off based off of dividend income, we can see all of these in green all had a yield over 10%, which is really great. And from the worst dividend income standpoint, we've got GGAL, MTR, BMA, PBT, GWRS, VIV, and PECO. All of the yields pretty low, under 3% based on our original cost. If we look at net asset value though, right, the amount, what changed with the value of our $10,000? These companies went up in value significantly. AVAL, PBT, which had one of the lower yields. We had SBR, Main Street Capital, BBD, VIV, ITUB, EPR. All of these went up by more than $2,000 in net asset value. But of course, all of this is a blend. net asset value, dividend income. So what's the total return? All of these companies here, right here, all of them were over a 10% total return for the year. And unfortunately, we don't have a single company that's in the top results for net asset value and dividend income. BST and TBLD kind of fell right in between here, where they didn't have the top dividend income or the top net asset value, but they were right in the midst of total returns. By the way, in this column E here, the stock price, it's shaded in red if the current stock price is near the 52-week high, potentially meaning that it might not be as good of a deal right now. Or if it's in green, it means within 5% of its 52-week low. Now here's a look at the 1-year total returns. And this is kind of a crazy graph here with all of these stocks in there. And really what I want you to do is look at the outliers. This one in particular was HSHP. That one actually rebounded and did okay. This one down here, the low ones, PSEC was down here. Along with in red, we have LAND. In this gray right here, BMA. Down in yellow, OXSQ. Whereas the outperformers up here in the dark gray, AVAL and also PBT. Both performed really well consistently. Now, as we know, owning monthly paying stocks is more of a long-term investment because we're expecting to receive those consistent monthly dividends and have that investment compound and grow over time. So let's look at the 5-year returns next. Let's first look at dividend income, and these are the top performers for dividend income so far. Permrock Royalty, Cross Timbers, Permian Basin, Pennant Park Investment, Sabine Royalty, and Tortoise Energy. All of them with dividend income nearing or exceeding $10,000 over a 5-year period. And these were the worst performers here. Granite Real Estate Investment Trust, only $787 during this time frame. Global Water Resources, U.S. Global Investors, Gladstone Land, Telefonica Brazil. From a net asset value perspective, the top results here, I mean, this one is a major outlier. I'll come back to that in just a second. PBT worth $73,000 over 5 years. That's $10,000 going to $73,000 without reinvesting dividends. Then we've got Grupo Financiero, I guess, $37,000, TYG, Banco Macro, SBR, iTub, PRT, EPR, and then Main Street Capital here. All of these grew their capital and doubled it from $10,000 to $20,000 or more. Worst performers from a net asset value perspective, meaning that their capital declined here below $10,000, from $10,000 to $27.59 for Orchid Island. Terrible. Then we've got Armor Residential at $31.28, Horizon Technology at $48.95, Ellington Credit at $49.01, and then Prospect Capital at $54.13. All very underperforming. Now, from a total return perspective, top result again here, PBT, Permian Basin Royalty Trust, up 739%, crazy. Then we've got GGAL, TYG, PRT, SBR, BMA, PNNT, all with a total return of over 200% over that 5-year time frame, which would be an average of about 40% per year. And again, total returns is the combination of the dividend income as well as the net asset value. Worst performers over this 5-year time frame: Orchid Island down 23% total returns, Land or Gladstone Land Corporation down 22, Armor down 19, Dock down 10, Ellington down 3, and then Horizon Technology down 2. Every other company technically made money over this 5-year time frame. For a 5-year total return standpoint, here's the graph. You can see PBT up here massively outperforming, although you can see that in green this was outperforming for the majority of 2024, 2025 before it dropped below. This was GGAL, significant drop off. We also had a significant drop off with BMA, which significantly went down at the end. And the majority of these companies were just right here in between, somewhere between $10,000 and $20,000 with a few outliers, of course. All right, let's take a look at the 10-year returns for these stocks. And we do have a few, by the way, that don't have any returns. We've got these down here. These 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 of the 55 do not have a 10-year history. Top result here, Gain or Gladstone Investment, $17,000 in income. BST at 16. Then we've got SAR, SBR, and HRZN at $13,000 in dividend income. The majority of them fell somewhere between $11,000 and $8,000. Worst performers down here, this section right here: Telefonica, Mesa Royalty, Grupo Financiero, SL Green, US Global, HealthPeak, Banco, Granite Real Estate, and Apple Hospitality REIT. From a net asset value perspective, there were some clear outperformers here with capital that doubled over this 10-year time frame from $10,000 to at least $22,964. Main Street Capital here at $22,964. We've got Agree Realty at $23,838. Itaú Unibanco, $24. We've got Sabine Royalty Trust at $25,690. BlackRock Science at $26,374. and Permian Basin at 29,674. Worst performers here from a NAV perspective. Again, this is $10,000 over 10 years, dropping to below 5,000. Ellington Credit down here to 44.56. Grupo Aval 43.42. TYG, PSEC, ECC, Orchid Island Capital, and the worst here, Armor Residential, down from 10,000 to 14.94. Now, granted, a lot of dividend income, but net asset value dropped significantly. From a total return perspective, the top results here, the companies that actually had total returns north of 200% over this 10-year time frame were Ital Unibanco, Agree Realty, Main Street Capital, Gladstone, Permian Basin, Sabine Royalty, and BlackRock Science and Technology. Worst performers here, SL Green down 16% over 10 years, ouch. Mesa Royalty Trust down 14, Tortoise Energy down 11, Health Peak Properties down 11, and Armor Residential down 3%. Here's that 10-year total return chart. This is a combination, essentially, what would 10,000 have grown to if you had reinvested dividends over this time frame? So total returns, we've got the top result here. There's a few really close together. We had some outperformances during the early part of the year, specifically here in light blue, PBT, which ended up near the top. Then we've also this huge spike right here in purple. This is GROW, ended up kind of in the middle / on the bottom side. Most of the companies here are somewhere between $10 and $25 to $30,000. Now with the 20-year returns, we only have, I believe, 22 of the 55 dividend stocks that pay monthly, of course. Top 5 results for dividend income were CSWC, or Capital Southwest, followed by Realty Income, Dynex Capital, LTC Properties, and Gladstone Corporation. Worst performers here, right, this section here, CRT, or Cross Timbers, Grupo Financiero, U.S. Global Investors, Mesa Royalty Trust, and Telefonica Brazil. From a net asset value perspective, what happened to the $10,000? These companies more than doubled it. Grupo Financiero, which had the worst income, Capital Southwest, which had the best income, then we had Realty Income and Agree Realty Corporation. Worst performers here from a net asset value perspective, Gladstone, Tortoise Energy, Prospect Capital, Cross Timbers, and Mesa Royalty Trust. And from a total return perspective here, top result, Capital Southwest at 422%, Realty Income at 356, Agree Realty at 303, Grupo Financiero at 281, and then we had LTC, Ital Unibanco, and Sabine Royalty Trust. Here's the 20-year total return chart, October 2005 through September of 2025. We had some spikes here, like this dark blue one right here, which was Grow, which ended up not doing much better the rest of the way. In fact, it ended up near the bottom. We had a spike here from this blue one, which was GGAL, which ended up near the top, actually. Not quite the top. The top result here, again, was in gray, CSWC, or Capital Southwest. Lots of them ended somewhere between $10,000 and we'll call it $40,000, with a few performing much better than that. So as we look at all 55 of them, what we try to do is figure out, well, which one have the best, most reasonable, consistent performance? And we'll come back to that in a second, what we mean by that. But what has the most consistent? And you can see this one right here, Sabine Royalty Trust, SBR, performed well over the 10, 5, and the 1 year, though it didn't do as well in the 20 year. We also have some consistent negative performers like MTR. PBT also did well. And really what we want to avoid is stocks with significant volatility from a net asset value and a dividend income perspective. By the way, if you did end up downloading this spreadsheet, you can see that on each one of these tabs down at the bottom, I included the dividend chart, because sometimes there's more information and data below the surface. Like ITUB, you can see the dividends are very volatile, versus Realty Income, steady and growing consistently ever since 1994. Some of them are a little bit more sparse, where some are high and some low. Some dividends are increasing and then decrease significantly. Some dividends wildly inconsistent as well. Seems like Capital Southwest was probably the best performing BDC based on this data. There was kind of some inconsistent data here. Prospect Capital and Gladstone both did not perform well consistently based on net asset value and dividend income. From a REIT perspective, Agree Realty did well and didn't have any real major red areas. Realty Income also did well and was also positive on every single time frame, where there were some that were consistently negative, like Armor Residential REIT right here. So I think one of the key takeaways here is that yield isn't everything. Just because a stock has a really high dividend yield right now doesn't tell the whole story. In fact, it almost tells none of the story. The dividend yield only means what you would yield right now if you bought it right now. If you bought it a year ago, that doesn't mean your yield is what you're getting right now. It could be far higher or far lower. Sometimes those dividend yields are a direct result of significant price changes. So you could have a really low yield right now because there's been a steep price increase in the net asset value. And on the flip side, and probably more commonly, what you see is a really big spike in the dividend yield, which is caused by a significant drop in the net asset value, which is good if you haven't bought in yet and you think now is a good time to buy. Not as good for you if you bought a couple years ago or even last month and the yield spiked this month. And dividend yield, maybe more specifically dividend income, is only one aspect of total returns. You also have to factor in what changes to the underlying capital. The biggest key takeaway for me here is, as we look at all 55 of the monthly dividend paying stocks here, what is most important to you? What are you trying to accomplish? And does that align with buying individual monthly paying dividend stocks? I would say generally that would align with somebody who needs income now or in the near future. And what you really should be seeking is stability, at least stability in the net asset value. Maybe you're different, but I imagine if you're buying dividend stocks, you want some level of stability in the price and a dividend that's stable or increasing. If your dividend has a lot of volatility, ups and downs, where there's no dividend and a big one and then kind of a medium-sized one and then it goes away, and the price is wildly shifting up and down, that's not a good recipe for long-term investment. And so with that, I say that the biggest takeaway for me is it's not a good fit for me to own individual dividend paying stocks. If you're looking for yield, an ETF is probably, but not always, but probably going to be a better fit for you unless you really enjoy looking at the underlying companies, tracking them, monitoring them to see if there's any change in the dividend policy or significant changes in the net asset value. Again, as a reminder to you guys, if you want access to this spreadsheet, you can have it for free. All you got to do is click on the link down in the description below. Hopefully you found some value out of this video, guys. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many of those comments as possible on the day I post a new video. Make sure to also let me know which dividend stocks or which dividend ETFs or high yield covered call ETFs do you want me to cover more in depth in future videos. That's all I got for you guys. Have a great rest of your day, and thanks for watching.